90% of traders would have taken this trade, just to turn into a huge loss shortly after. Now, if you zoomed out and properly analyzed the external and internal structure, you wouldn't even have taken this trade, because you would have noticed that you're selling short an external uptrend. So let's jump right into explaining how this concept works, while backtesting setups. By zooming out on the high time frame, you can see the main direction of the market, which of course we can notice just by looking at it that it's been increasing or appreciating. This appreciation happens when a market is on an uptrend, but this is where things get more complicated, because we have what is called an external uptrend, which basically means that the larger trend is bullish, no matter that we've also got downside action here, for example. The external price action during an uptrend forms high time frame higher highs, with high time frame higher lows, the end destination being to the upside. The important moves on the external price action can be seen easier if you're changing to the line chart, but just visually, because the candles have a higher accuracy and you'll find better setups using the candles. But in between these external higher highs and external higher lows, the market also forms relevant movements in between the swing levels. For example, look here where we got a mini uptrend formation of higher highs and higher lows inside this larger upside move, and then it switched into a mini downtrend by forming lower highs and lower lows inside this large time frame pullback. So now you should know that on external high time frame uptrends, the pullbacks are low time frame downtrends. And during an external high time frame uptrend, the low time frame price action is aligned with the high time frame one, both pushing to the upside by following an uptrend. And this price pattern repeats once again, followed with another pullback on the external price action, which is seen as a downtrend on the internal price action, followed with a continuation of the high time frame external uptrend that basically aligns them together, both being in an uptrend, and it's now where we've got the most recent move, being a last external downside pullback, which is an internal downtrend. Now I clean this up a little so we can understand the next important part. If we pay close attention, during an internal downtrend, the market pushes back down, pull back up, then it breaks down below the previous low. So basically, it tries to break into a higher high, but it fails to do so, and instead it forms a lower high, from where the market pushes down into a lower low. Now, when a previous low breaks down during a downtrend, that is called a break of structure. After a break of structure, the market usually pulls back once again into forming a lower high. Now, this lower high usually ends right up on a supply or resistance, from where the market rejects back down into forming a new lower low. The supply or resistance is actually what gives traders an opportunity for a sell-short setup inside this internal price action, and you will often see this happen time and time again, like a chain. So once again, after a break of structure, the market pulls back to the upside, hopefully to fill a supply or resistance. But here the lower high actually happens slightly lower, so in this case we don't have a setup to trade from, and it's completely fine as you don't even need many trades if you're able to do this type of complex analysis. By learning to analyze and trade like this, you will be able to filter out many bad setups and find high-quality ones. The high-quality setups provide a pretty high risk-reward ratio with also an increased accuracy. And one more time, after the break of structure, we get a pullback to the upside, pullback that this time manages to fill the supply or resistance, giving the traders that are paying attention on the internal price action an opportunity to sell the market down into breaking the previous low, just like it happened here, for example. A very similar setup. It's how the selling positions are usually planned during internal downtrends. So back to the last setup, where the market moved into the lows, breaking bearish structure. And it's from there where the market just continuously moved down, without any significant pullback, this happening for a while. And it's only here where we need to pay close attention now, being the last moves that we're able to see, and also the market prints an interesting movement. Until this level, the market formed a constant repetition of a lower high with a lower low. But here we see for the first time a higher high, and we can also look at the line chart so it's much easier to see. Look here. A break of the last lower high, which sets in the first higher high. The first higher high during a downtrend is a market structure shift. It shifts the trend from a downtrend into an uptrend, and this being an internal price action, it shifts the internal downtrend into an internal uptrend. So basically, this is what happened. The market initially started off downtrending with lower highs and lower lows, but of course, because the market can't go down forever, at some point it has to start some upside momentum. And that's seen on the price chart with a break of the previous lower high into a new higher high, from where the most common move it's a continuation of the recently reversed trend. So right now we are at this level. There it is, the break. We can easily see how the bullish candles are much larger than the bearish ones. Here we have the first bullish break of structure after the trend shift. Right above we have the second one. During an internal uptrend, we look for demand or support levels where we can place buy-long positions. But on the first demand, the price didn't even pull back into the level since the buying pressure was so strong. And this will happen quite a lot, but that shouldn't be a problem. It's far better to miss trades than to lose trades. Now here we have the second demand or support. Here the price got closer to fill the level, however it didn't manage to do so. So we're looking for another opportunity. Moving on, the upwards push above the high formed a break of structure. After a break of structure we expect some downside action, a pullback, and we got it. But now pay close attention. So right after the market structure shift, we've reversed from an internal downtrend into an internal uptrend. Now this downside move that just happened right now breaks below the past low. And if it's easier for you to observe, I will switch into the line chart. So now it's seen more clearly right here. So the first break of the past higher low during an uptrend is a bearish market structure shift. And because this is on the internal price action, this is an internal shift from an uptrend into a downtrend. So now we're pretty much expecting to have a similar type of move like we've had before the bullish trend shift. So basically a downtrend formation. And during a downtrend formation, the previous swing lows act as liquidity levels that get taken down, and we can use these levels as take-profit targets. So if the take-profit levels are to the downside, and the market has reversed internally into a downtrend, we are bearish biased, so we can look for a supply or resistance as a selling opportunity. There is only one, which is right to the top, up here, where the price is sitting exactly there at this point. So we can look to sell short with a stop loss above these local highs. And for the take profit, we can target one of these liquidity levels in case where we are planning to trade the internal downtrend. Or we can zoom out for more details if we want to trade the external downtrend. For example, here it's a high time frame supply or resistance. And we can see how the price filled this level, right where we're planning to sell the market down. So we pretty much have alignment of both trends moving to the downside. This is just an extra confirmation or validation that there are higher chances of the market breaking down than push higher at this point. So we can look to target the first liquidity point as the take profit, or the second one if we want a higher risk-reward ratio. And because of how complex the analysis was, I will target this middle level. Not really going to the last one, but the one in the middle is fine. Even though, the probability is higher for this market to break down into a swing lower low, and that mostly because the price filled this supply, and it looks like it's rejecting back down. This is why I would target this middle level, because even if we would be wrong, and the market would continue this uptrend, the price still has a chance of first hitting the take profit before continuing to the upside. And it actually went much lower than I was expecting, but the good part is that all the analysis was worth it in the end. On this market, we see an external uptrend, basically a high time frame formation of higher highs with higher lows, and you can see it easier on the line chart. Now that you already know the main idea, we can move into the recent price action. And more specifically on this upside move, which was then followed by a pullback to the downside. This downside pullback breaks below an internal higher low, which flips the internal uptrend into an internal downtrend, with lower lows that are respected with a bearish break of structure. However, this internal downtrend did not last for a lot of time, because shortly after, we're starting to see bullish pressure getting into the market, this move eventually breaking above the lower high, which flips the internal downtrend into an internal uptrend. Let's see on the line chart. There it is. On internal uptrends, we look for demands or support levels to buy from and take the market higher, which eventually happened shortly after, with this move even breaking above the external high, forming an external break of structure, basically a continuation of the high time frame. Now we pay attention on the internal price action. We've got higher highs and higher lows, but on the most recent internal move, the market moved down and broke below the past higher low, flipping the internal uptrend into an internal downtrend. On internal downtrends, we look for supply and resistance levels to sell from, because the internal downtrend usually forms constant lower highs with lower lows. So looking for the supply, the only internal supply and resistance on this recent price action should be around this level. So we're planning a setup with the stop loss above the recent highs and the take profit below the recent lows. And looks like it continued to move lower without pulling into the supply. and instead it pulled back on a lower level. But still, the price action has respected, forming a lower low, validating a break of structure down here, which can be easily seen on the line chart. So now we need patience, since the probability is for the market to repeat a similar movement, meaning a pullback to the upside, followed by a rejection to the downside. So in that case, we're now selling short from the newly formed supply or resistance, which is basically the last recent bullish candles before the downside action started happening. The stop loss and take profit targets have the same logic. Stop loss above the recent highs, take profit below the low. Now here it also looks like we missed this trade, but it's fine. It takes a while to find the high-quality setup. We just wait for the market to print an opportunity, moment where we can jump in and take advantage. Now if we zoom out, we can see how the market is approaching a high time frame demand. We can trade it, or we can use it as an extra confirmation for a trade inside the internal trend. But for now we wait and see what happens, and we can decide later, depending on how the market is moving. So a couple candles later, it moved into the external demand or support, and it's looking like it's the beginning of a bounce out of this support. Let's check the line chart. So it continued with lower highs and lower lows when it hits the zone. But look here. It basically formed a higher high, breaking the previous lower high, validating a trend shift from an internal downtrend into an internal uptrend. On internal uptrends, we look for demand zones or support levels near the higher lows. And this works so well because we also have an alignment with the high time frame demand. We can position the setup with the stop loss below the low. And because we have enough price action data from the left, we can look for a more logic exit. For example, on the first resistance or supply, or on the one from above. But I'd choose the first one from below, since these levels are rejection zones. We'll increase the chances of the take profit being hit. And also the risk-reward ratio is more than enough in this case. There is no need for more. The trade gets open 2 candles later, and a massive bullish pressure kicks into the market, eventually moving into the first rejection level, which is the trade's take profit level. From where, look, as mentioned, it's starting to come back down. But it won't matter what happens for this trade specifically, since the position is basically already closed. Now, this is just only one of the concepts that you must understand very well. There are many and just as complex, and because they can't all be discussed into a single video, you have all materials and much more on the link in the description. Take a look if you're interested, because it helped many traders, and it will eventually help you as well.